Dinar exchange rate update. Iraq's oil revenue and budget changes 2025. Written in paragraph format, and with the intro for your channel RV News included. Welcome back to RV News, your trusted source for everything related to the Iraqi Dinar. Global revaluation updates, economic shifts, and insider currency developments. If you hold Iraqi Dinar, follow Middle Eastern fiscal policy, or are watching the revaluation narrative closely, you won't want to miss a second of today's report. The developments out of Iraq in 2025 have been nothing short of monumental, from massive oil revenue surges to sweeping budget overhauls, and the most talked about potential exchange rate adjustments we've seen in years. This could be the pivotal moment many have been waiting for. So, buckle up, subscribe if you haven't already, and let's dive deep into the dinar exchange rate update and Iraq's shifting financial terrain. As we cross into the second half of 2025, the momentum building within Iraq's financial system is unlike anything we've seen in over a decade. At the center of this momentum is oil. Iraq, being the fifth largest oil producer globally, has seen a substantial increase in revenue thanks to a consistent upward trajectory in crude prices. This has allowed the Iraqi government more fiscal breathing room than ever before, and it's starting to show in their latest budget revisions and salary allocations. But more importantly for dinar holders, these factors are now directly linked to discussions about exchange rate policy. For those who have long awaited a revaluation or rate adjustment, these developments could be signaling a shift from speculation to preparation. In early 2025, Iraq's oil exports crossed the critical threshold of 3.8 million barrels per day, with prices hovering consistently above $95 per barrel. This spike in production and pricing has catapulted Iraq's monthly oil revenue beyond the $10 billion mark. Compare that with just a few years ago when revenues were barely half that amount, and it's easy to see why economists and international investors are paying close attention. This isn't just a temporary boost. These sustained earnings have given the government enough confidence to implement budget reforms that were previously delayed or considered too risky. The 2025 Iraqi budget, which was ratified in March, is the largest in the country's history, with over 250 trillion Iraqi dinars allocated across infrastructure, public sector salaries, defense, and energy development. What makes this budget especially important, however, is how it's structured. For the first time, it incorporates dynamic oil pricing models to adjust spending levels throughout the fiscal year. In layman's terms, if oil prices remain high or rise further, Iraq can immediately increase investment without needing new parliamentary approval. That flexibility is crucial in a country so tightly linked to global oil markets, and it's a sign that Iraq is trying to modernize its budget practices. The most talked about element of the budget is public sector salaries. Historically, Iraq has struggled with timely payments to public employees due to cash flow issues and inefficient government systems. But in 2025, the situation has shifted significantly. With oil revenue flowing reliably, the Ministry of Finance has already reported clearing all outstanding salary payments, and even planning for bonus distributions in key ministries like health, defense, and education. What does this have to do with the dinar exchange rate? A lot. Stable salary payments mean greater domestic consumer confidence and stronger demand for the Iraqi dinar within the country, both critical indicators that support a healthier exchange rate environment. Parallel to these economic reforms, Iraq's central bank CBI has taken measured steps toward increasing monetary transparency and stabilizing the dinar. Over the past 6 months, the CBI has been gradually reducing the spread between the official exchange rate and the parallel market rate. In early 2024, that spread was as high as 20%, causing problems for businesses and eroding trust in the currency. But by mid-2025, the spread has shrunk to less than 4%, thanks to improved Forex reserves, increased dollar inflows from oil, and a crackdown on currency smuggling. As a result, the official exchange rate remains at 1,320 IQD to the USD, but whispers of change are growing louder. Sources inside the CBI have reportedly discussed testing a gradual upward adjustment in the dinar's value in alignment with the IMF's recommendations and Iraq's current account surplus. The idea isn't a massive overnight revaluation, but rather a series of incremental upward shifts to reflect real economic strength and reduce dependency on the dollar. This strategy is referred to by analysts as a crawling peg model, and would allow for controlled appreciation of the dinar while keeping inflation in check. One of the major catalysts for these potential changes has been Iraq's international relations, particularly with China and the United States. Earlier this year, Iraq finalized several long-term oil export contracts with Chinese state-owned energy companies, which include payment terms in Yuan, euros, and increasingly, dinars. The push to reduce dollar dependency in international trade is a growing trend, and Iraq is not alone. However, this move places greater pressure on the CBI to strengthen the dinar, if it hopes to use it in regional or global trade effectively. Meanwhile, the U.S. Treasury has acknowledged Iraq's improvements in anti-money laundering measures and currency reporting, giving more leeway for Iraq to control its own monetary trajectory. Domestically, Iraq's private banking sector is beginning to show signs of life after years of stagnation. In 2025, we've seen a noticeable uptick in personal and business loans, increased ATM deployments across rural areas, and a broader push for digitization of dinar-based transactions. The CBI has launched a public awareness campaign to encourage dinar usage over US dollars, particularly in large retail and commercial sectors. This is a deliberate strategy to de-dollarize the local economy and normalize confidence in the national currency. A nation cannot revalue a currency that isn't used. By boosting local dinar liquidity and trust, the CBI is laying the foundation for any future exchange rate shifts. The big question remains, when will the rate change, and to what level? While there's no official confirmation of an exact date, financial insiders and economists in Baghdad have pointed to Q4 of 2025 as the most likely window for a formal adjustment. This timeline coincides with projected oil revenue peaks, final approval of Iraq's new sovereign credit rating expected to move from B to B+, and the anticipated rollout of a new series of lower denomination dinar notes. These notes, rumored to include 10, 25, and 50 dinar bills, would be practically useless at today's exchange rate, further fueling speculation that they are being prepared for a higher value currency environment. In tandem with domestic efforts, international organizations like the IMF and World Bank have been actively involved in advising Iraq on economic restructuring. Their joint mission statements in recent months have praised Iraq's fiscal discipline, particularly in reining in non-oil deficits and reducing off-budget spending. They've also encouraged Iraq to prepare for currency flexibility and integrate more deeply into the global financial system. Many believe this is a subtle way of greenlighting Iraq's gradual return to a more competitive and market-driven dinar value. Another key component to this entire equation is Iraq's political stability. Under Prime Minister Mohammed Shia al-Sudani, the country has experienced a relatively calm and consistent political climate, which has enabled bold fiscal decisions to be made without fear of widespread backlash or parliamentary obstruction. This stability is essential for international investors and currency traders, who need confidence in the long-term sustainability of any rate adjustment. The success of oil revenue utilization, salary regularization, and a transparent budget model all hinge on political will, and so far, the government is delivering. On the streets of Baghdad, Erbil, and Basra, there is a cautious sense of optimism. Currency exchange shops are reporting increased demand for dinar holdings, with citizens betting on a future increase in purchasing power. At the same time, real estate markets are showing renewed activity, fueled by stronger liquidity and a sense that Iraq may finally be turning a financial corner. Business owners are expanding, investors are returning, and the sentiment is clear. Something big is on the horizon for Iraq. So, what does this all mean for dinar holders outside Iraq? If you're holding dinar waiting for a revaluation, all signs point toward 2025 being a year of foundational change. Whether the rate adjustment happens in one bold move or in a series of gradual steps, the underlying economic indicators support the idea that Iraq is preparing for a stronger currency environment. That said, patience and caution remain critical. The global currency system is complex, and shifts like these don't happen overnight or without meticulous planning. As always, we remind our viewers to stay informed, be wary of hype or misinformation, and follow official sources such as the Central Bank of Iraq, the IMF, and credible economic analysts. The narrative is evolving rapidly, and each day brings new developments. But from oil revenue windfalls to budget surpluses, salary reform, and exchange rate planning, Iraq is making deliberate moves that cannot be ignored. Before we wrap up, let's review. Iraq is currently enjoying a golden moment of oil-driven prosperity. The 2025 budget reflects smart